The views and opinions expressed on Live at the Barbershop are entirely those of the host, guest, and caller and do not reflect the opinions of Live at the Barbershop or its staff. Viewers' discretion is advised. The following podcast is intended for mature audiences only and contains adult contents, graphic language, strong sexual content, and a whole lot of shit talking. So in other words, get your kids out the room.
Live, here we go at the Barbershop with your hosts, Misha J, Aaliyah, Black Republican, and those two crazy Caribbean guys from the Q&N show, Norris and Q. And now, the man of the hour, Mr. HNIC, Mr. Sleep When You're Dead, Hustle Now, the magnificent.
Yo, son. What's up with all that?
Oh, I was just trying to amp it up, you know, like...
Oh, okay, all right, yeah, I'm all right, I'm with that.
John, live at the Barbershop podcast.
What's up? It's another night, man. It's going down in the shop again. The shop is officially open, man. Yeah. We're gonna show. Tonight is not the chopping up night. Straight segment. We're gonna hear some good things to listen to tonight
from our special guest.
Yeah, how to handle that money. All right, we're gonna move along. See, I'm your host, one of your hosts, Q. Next to me is the beautiful Sassy in house tonight. She's in the shop tonight, man. She decided to come sit in tonight. Yeah. So tonight, I guess we're gonna talk about life insurance, the importance of life insurance, especially in our community.
Especially
in our community, when we say life insurance, the first thing come to your mind is
how much?
You trying to kill me? Are you thinking of doing me wrong or what? You know, so we have somebody tonight, you know, let us know.
Yeah, we got us
on the rights of life insurance, the best policy, the best ways, and you know, one of the most important things for me is to hear, can I get some money? Okay, yeah. So we're gonna move. You want to introduce our guest tonight?
Tonight we have Fabian Wilson joining us, our resident insurance expert.
Yeah. Yeah, he's gonna let us know what, man, with a lot of people on his catalog, man, that he's, you know, about there doing their thing. So we're not without further ado, we're gonna introduce the rest of the guests first. Host, we got boy, John. He's not in house tonight, but he's here, ready to talk about his money.
Yes, sir. What's good?
That's the money, man. That's the money we're going to talk about.
That's the money maker. That's the money maker right there. What's good? Fabian, what's good? How you doing?
Listen, I'm tough, man. I'm tough. Well, you're in my zone right now.
That's what we're trying to do tonight.
In my zone.
Is educate everyone out there in the community on the best ways on the different term life and different the lingo. The lingo, I think, is what confused people the most when they start to see the paperwork and knowing this term life, permanent this, and so this is why you're here tonight, to kind of iron out everything to make things more what's the word?
Clarity,
you know,
clarity.
the word.
They need clarity, man. That's all they need. Clarity.
Right. And just give clarity on everything, on the best route that we should take. There's a few people that chimed in earlier with me, sent me text messages and different messages they want me to read off to you to try and get the answers. So I'm going to do that as well throughout the show as well. So without further ado, I guess Sassy, I'll let you lead off with that one, because I know you had a couple of questions from the previous time. Fabian, you and I, we were all at a function and we were talking about that. So Sassy, I'll let you, I'll turn that over to you and so you can get that going.
Yeah,
Can we bring
we
in
bring in our other
Blacks?
host, Blacks Republican. Stop.
Yo, what's good, what's good, what's good?
Oh, that's good.
See how Fabian laughed when he said Republican.
This man, hey, look here. You keep on. You see what your choice to the side is doing right now?
Hey,
Huh?
Hey,
Fabian, I'm gonna
listen,
tell
I,
you what.
Politician,
I'm
man.
gonna tell you, Fabian. I'm gonna tell you what his favorite chips are. Orange.
Sorry.
Oh, hey, that's white
hey,
cheddar. That's white cheddar.
All
Calm
right,
down.
man. We're gonna bring in the next panel, man. Madness. What's up?
Yo, what's up, fam?
what's up?
Yeah,
What's
What's
good?
good?
What's good?
yeah, man.
All
All
right.
right. All right, Sassy, go ahead.
Help.
Hold on, Sassy. The mic. I can't hear you that well.
Oh, I think it's too far.
That matter?
Oh,
Just-
tell IT to
just
turn
bring-
it up, son.
Bring it up to just,
Oh man.
Mhm.
All right.
You good now?
I think I'm good. I can hear myself.
She's good now.
Yeah, both of
Yeah.
y'all sound real low, but
All right.
we good. Let's do it.
Go ahead.
turn it up a little bit.
Yeah.
No, but
We'll let Fabian lead us then. So please, we usually hear term life, whole life. Please break it down.
All right, listen. First of all, I must give you guys, much respect for the platform. It's the first time coming on the barbershop. I had to
Yes.
go get a haircut today because they talk about barbershop.
Uh-oh.
But listen, John, as we mentioned before, man, that night when we was at that function, it's just about education. I'll tell you, once individuals get the education and what to do, they're gonna make the best decision for themselves and family. But there's a lot of different insurance out there, and guys, you notice I'm messing with this thing. As the first, I'm using these earbud things, so just work with me, okay?
Definitely.
All right.
It's falling out. I don't know how to control it, but it's all good.
That's
I'm
about-
gonna get the information out.
Yeah.
All right. So here's the deal. There's the life insurance. First of all, maybe individuals on here don't know what life insurance is.
Right.
So let's start with that. I think that's fair enough for everybody to know what is life insurance. Pretty much, life insurance is just pretty much an agreement between you and an insurer, an individual or family and an insurer. Insurer being that's the insurance company that takes on a risk, right? And have the individual or the policyholder or the insured, they're gonna pay what's called a premium, whether it be on a monthly basis, quarterly, by or every 6 months or annually. So you could pay your insurance that way. But the most thing that you want to know is that insurance on a whole is like buying cash. I hope you
Okay.
guys caught that. It's like you're buying cash. Because understand the way insurance works is you could sign up for a policy right now, tonight,
Yeah.
and your policy goes into immediate effect. And unfortunately, you might pass tomorrow. The insurance company, once you are correct in terms that you spoke the truth on the application, the insurance company they're going to be paying out that amount to whomever you select as your beneficiary. So that's why we say it's like a term like buying cash, because you even without making one payment, right? You definitely buying cash that way. So I think again, um, before we actually get into the different types of insurance, um, culture. I know we talk about culture a lot, right? So the main thing that you want to know some statistics, right? In our community, and I could tell you just going off of some statistics, I pulled it up earlier. Right now, 27% of North America adults under 65, right, do not qualify for life insurance.
Why?
Qualify.
Why? Why? I'm getting there. Why? Life insurance looks at two things, guys. They look at your health. Your health is to qualify you, and your age, right? Your age is to give you the rate. Okay. Now, Along with that, you got 38% of American families, right, gonna leave their family in some form of distress,
Mm-hmm.
right? So the two things I want you guys to understand: are we gonna leave our family with distress or generational wealth? And we're gonna get to that, okay? And then also, 40% of America adults, they wish they had bought life insurance when they were young. So we're gonna get to what that means, okay? So let's talk about the different types of life insurance. There's different types. Different companies use different words. Okay. There's really three main types of policy, and they all categorized. You got term, which is temporary. Okay. And you got different types of term, including like income protection, mortgage protection, 10-year term, 20-year term, and all that means is just for a term. It's like renting an apartment. You figure you rent an apartment and the lease is going to be up in maybe a year, 2 years, whatever the term is. There's a fixed amount that you pay for that amount of year time. When that time is over, then right away, then the term is up, or you're going to try to qualify again for more life insurance. More things that you need to know about term. Term policies, 97% of term policies does not pay out. Why? Because individuals outlive the term. Okay. Now I want you guys to understand something. The youngest you're gonna be is today. Okay. Guarantee you tomorrow you're gonna be a day older, whether you like it or not. Okay. I'm just giving you right now, whether you like it or not, you're gonna be a day older tomorrow. Now, so when I'm sitting with families, and again, each family is gonna be based on a need-based analysis, and we'll get to that. But what I want you to understand is a lot of people take it for granted, and then you find that their families are doing that thing called GoFundMe. We want to make, absolutely, we want to, that GoFundMe thing, we want to, let that be our history. You understand? And that's why we on this platform educate people and at least have their basic expense. Now, more information about term. Term policies pretty much does not build cash value, and I'll tell you what that means. Okay, term policies pretty much there's different types as it relates to renewable and convertible, and we'll get into that. Okay, but now let's talk a little bit about permanent whole life. Okay, so in permanent whole life you have whole life, means it's gonna stay with you for what, an entire life, duration of your life, right? And then there's index whole life. They talk about universal, variable, flexible, and you see a lot of commercials talking about how to invest in policy, flip it, and make money. So there's a lot of different ways to do it. In the first thing that I do is I teach individuals first how to protect themselves and family first. Then you go off to investing and trying to flip it and make money with insurance, because it's life insurance. So it's for two things. It's for debt, where you create generational wealth, but also there's ways that you could capitalize on life insurance and make sure that you create a financial stream, in terms of passive income for you and your family.
Okay.
Did that answer your question? Is that easy?
That's it. That's it.
It's easy.
Oh man.
Yo, Q, you rocking the musics, right?
I apologize.
I mean, I know you're balling and everything.
Who is it?
You got his tax return money. All right. So I have a question that came from one of our families out there in California, and she was asking, does the type of death change the policy? So,
yes.
For instance, now if it's a suicide, a murder, or anything like that, does that affect the policy?
Great question. So here's the deal, and I've been asked that a whole lot of times. Understand, insurance companies, they pays out based on individual companies are different, and that's why it's good to always have your agent go over the policy with you and cover these questions. I can't account for all companies. You understand what I'm saying?
Right.
Because when you want to trick us folks, what you do, put it in what writing, right?
Right. Yep.
Yeah, a lot of people call me and they be crying because it's in writing, and when the insurance company, when they see that hike in price or something changed, the company says take your policy out. That's the first time they're ever gonna look at it since they pick it up from the mail. You see what I'm saying? So the main, it's true.
It's
The
true.
main
It's true.
the main thing you gotta understand is when somebody dies, okay, there's different categories. Of course, they're gonna, as I said, I can't account for every company and their policies because insurance is a business. So of course they're gonna have exemptions to what they do and how they run their firm. So the cause of death, yes, is gonna affect the policy based on if because suicide, some companies suicide is not a part of it.
Right.
So it's a great question, but that's going to be a company in itself, deal.
Okay. Okay.
I mean, that's the best way I could answer it because it's a wide variety of companies out there.
Okay.
Yeah. Now, I have
Go
one
ahead.
real quick, John.
Yeah.
With because you made mention of term. Like term is not necessarily a good thing if you outlive the term. Is it possible to convert the different policies later on in the future?
Absolutely. There's different types of terms. So, and just a correction, like as long as you have something, that's a good thing.
That's better.
Doesn't matter whether it be term, something where I'm from, something is better than nothing because nobody knows when they're gonna pass. It just depends on where you are, what you're trying to do. Myself, I got a lot of term. Why? I got young kids.
Mm.
The main thing is you want to ask yourself when getting life insurance is because when I sit with family, I let them create the plan. I don't create a plan for them. I just answer to their needs. What's hurting that individual, that family, at that particular time that we're sitting with that client? Because here's the deal. One size cannot fit all because individual budgets and so on and income is different. But the main thing that we teach individuals is it ain't right if you got term, it ain't right if you got whole lot. No. As long as you have some type of insurance, but what we do is we make sure we educate you on the different types because what it is, you want to make sure you have something as it relates to if something happened because we don't control when something happens. And I've seen it many a time. Having a debt claim on a client that, within a year, never know that there's, kids, was gonna die or pass. It's no parent ever want to bury their child, but you know what happened. So it's not a right if you get whole life or if you get term. I just tell families have one. Start with the normally individuals, depending on where they're at as it relates to income, they're gonna start with term.
Okay.
You understand? And then the good thing about the term is you want to get one that's renewable and convertible. Why? Because when it's renewable, you could renew it. Pretty much, it's gonna auto renew. But what happens when you're ready to convert? They're not gonna check your health. What did I say? The two things were that they look at every time: your health and your age. So the way I teach clients is a lot of clients sometimes want to get 500,000. You know, they're money funny.
Oh damn.
So, so,
Yeah.
so the way you do it is because final expense, and I'll tell you what that is. Final expense with inflation right now, and don't laugh because I know sometimes people think, it's lesser than you think, but some families they're gonna want to go the extra mile in sending off their loved ones, and that's fine. But with inflation statistics right now, 30,000 is pretty much burial with inflation in another couple of years. So the way we teach families to get insurance, as it relates to debt and leaving generation legacy, This is not the investment part right now. The way we teach them to leave generational legacy is get their whole life out the way as it relates to their final expense. Have that because that price will never change. Term, it goes up. The price goes up 10 to 15 times after the term. You guys
Okay.
caught that? So what
I
happens?
understand.
The whole life stays the same, right? And that price is locked in until you die once premiums are paid.
Okay.
Okay, but the term, the price is going to change. But what's the beauty about it is, understand if you catch a heart attack, stroke, cancer, even COVID, that's doing detrimental things to individual health, terminal things to individual health. Thank God they figured out, the nurses figured out how to keep people alive right now. you know,
Hmm.
True.
but the way it is um, those things does something detrimental to your health. And what happened is, you have to lock it in as early as you can with the term renewable and convertible because when you're converting it, they don't look at your health as it relates to being a qualifying event.
Okay.
Yeah.
So
All
Fabian,
right.
why do you think our community is so scared of life insurance? Because we can set up a GoFund.
Yeah. Yes and no. Our culture is the minute you sit and when I sit with families, I educate them because this is a conversation that we don't have.
Hmm.
This should be a really around the table talk. Where you guys sit down as a family and talk about it because here's why. A lot of times, you leave out the house and you don't return. That uh, that uh, that creates a heart attack for your family. Because think about it. To whether you're married, a spouse or wife, husband, significant. It doesn't matter. Two income take care of what the whole home, correct?
Hmm.
So see what's happening right now. So one individual passed unexpectedly. Let's say that person was working 60,000 a year, just using 60,000, right?
Okay.
Now without insurance. Now it puts strain on the surviving loved one. I'm not even talking about kids yet.
Right.
It puts strain on the surviving loved one, even if they're a young couple just got married. Because I want you to understand, even young couples, what's hers is yours and what's his is mine. You understand?
Hmm.
Mm.
So the thing is, imagine you just bought a home and then there's a significant pass. So life insurance is put in place, and when I say life, it doesn't matter which one right now. It gets started is what I'm trying to say. Get started with something. Now, you just bought a house or a home, you're building, and now what happened is you find that income stops. It's an economic heart attack.
Mm.
Mm.
You understand? So it's recommended in the in insurance industry to protect your income up to 5 years.
Oh
It's
wow.
not
Okay.
bring your loved one. Yeah. So like someone so right now I want you guys to start think what your yearly income is because why you want to do that? It give your loved one time to adjust to their loss. Okay, it's not going to bring them back emotionally, but financially, it's a little bit of ease. That significant other doesn't have to relocate from where they're at and downsize from what they're doing. You follow me?
Right.
Okay.
So that's why it's recommended to protect your income up to 5 times whatever it is per year.
So what insurance is best for a single dude, no kids?
Great question.
Yeah. Make sure you put that single part on there. You hear that?
Very single, no kids.
Yeah, no, great. That's a very good question. So I got single child with no kids. My son is 25, and I make sure he got a lot of insurance. I'll tell you why.
Mm.
Mm.
I'm feeling the pinch right now. This is personal to me because I wasn't educated on the fact that the older you are, the more insurance is gonna cost. You follow me? So hear what I'm saying to you right now.
Uh-huh.
The younger folks, because I'm sure who asked that question, as a matter of fact.
That's
More
cute.
like you.
Q.
That's yeah.
Q.
So here's the deal. I'm sure you're young right now and you're single, but I'm sure you're gonna have a family, right? That's in the making, yes.
Yeah.
All right, cool. So you
Oh,
you
man.
want you want to get that situated early. That means it's like you getting early, so you're able to capitalize. And the cool thing is, I'm gonna teach you now with a young folk. What you want to do is, the only one that I'm gonna tell which one to buy is young kids. Young individuals, you want to get them whole life. Why? Because it's gonna give them a whole lot of time to build up a whole lot of cash value.
Mm.
You understand? You're gonna build up a whole lot of cash value with the young kids, because by the time you start getting your family, you'll never know when you might fall on a hard time and might need to borrow from that automatic loan provision.
So if I'm old and crusty, I need to get term life.
No, it's gonna.
Oh man.
No, and I get what you're saying. No, what I'm saying is it's gonna be based on where you're
Mm,
at, what your family structure is. You follow me? If you're
yeah.
married, you got home. Because first what I told you, 30,000, give or take, final expense. Now you want to think about mortgage protection. Now you want to think about income protection, and those are funded by term college education. You understand? Those are funded by term life insurance. Those are given to you at a lower rate with more financial stability in terms of the value of what you get.
Okay.
Makes sense.
Speaking on that now, what happened, Black?
No, I said it makes sense. But I was gonna ask as far as if you have like no health issues or anything like that, does that still pose a heavy factor on your age if you're getting it later on, even if you have a great health record?
Yeah. So the if you got a great health, if your health is great, that's the time to get life insurance.
Mm,
Because me, you, everyone, the platform, the viewers, we're just
Mm-hmm.
one doctor visit away from becoming uninsured and getting
I
that
got
need.
you.
Yeah.
You understand? So
Hmm.
life insurance is the only thing when I'm talking to a client, and it comes down to, sometimes they say can't afford it. You know, they want to think about it. I ask them what they're going to think about their health, what your health is going to be, because the
Mm.
thing is, I have clients who I go to, and a month ago and when I get back to them, they're saying, Fabian, they got this doctor's note.
Hmm.
At that point, there's nothing I can do.
Mm.
You understand? So the healthier you are, understand, the younger you are, that's the best time to get life insurance. And typically, remember, the older you are, the health, the
Hmm.
cheaper. You follow me?
Yeah.
Yeah.
So you want to always try to get things when you're younger, because that's the way you're going to qualify. Because if you're older and your health starts to deteriorate, what's going to happen? You could be quoted at a price initially, but once it goes through what's called the underwriting, because they're the ones who make the final decision, that price is going to go up.
Okay.
You
Okay.
follow me? Yeah.
Mm.
I got one of our viewer family here, Stacy, which seems like she's well educated on the subject matter. She said to ask about guaranteed insurability.
Okay. So guarantee insurability with and as again, I know Stacy. Welcome, Stacy. I know. Thank you for tuning in. Um, guaranteed stability is pretty much our company does that, because we're a union company, and that's one thing
Mm.
that you guys got to know. We're a 100% union label company, so on a regular we wouldn't be talking to you guys unless you're a union. So you guys just got exclusivity
Mm.
to union options, okay? Um,
Mm.
we don't call anybody. Our benefits are exclusively for the union: firefighters, police, nurses, teachers, unions and associations. Those are who we cater for. You got to be a union. They fill the card out. We provide the service. So you
Okay.
guys just have VIP access into the program. But guaranteed insurability option. It's like it's guarantee your insurability. And with Stacy, I know what she's talking about. It's with our company, it's 0 to pretty much age 40. It starts at age 25. Okay, pretty much what they're saying is they're guaranteeing your insurability um, to make sure that even if you become terminally ill starting at age 25, what happened once you have a GIO, guarantee insurability, um, they're still going to cover you at different option years at age 25, 28, 31, 34, 37, and age 40. Up to 6 times you could add an additional 25,000. But again, I know this is a broader platform, so it's not geared to all companies. Okay, that's something that our union offers. So even if someone becomes terminally ill, even if they're on their deathbed, you could still add 25,000. So that's what that Stacy's talking about.
And also, I was watching a clip where somebody mentioned that in our community, if there was more people investing in life insurance, we will get more protection from the police force because the insurance you people like you would have to secure us because you will be paying a lot according to
Um,
what's happening. You see what I'm saying? I've heard
yeah,
that over and over. If we invest in it, we will get more protection. Because you guys
it's
will have
fun.
to be protecting us more than the police. Because everybody the police get out, you guys
Yeah,
got to pay them. So it's been said like that.
funny. It's funny you said that because I share that same video too.
Yeah.
Because I don't like what I see with what those the law enforcement that should be protecting us is doing. But the main thing is we shouldn't have to wait for those videos to really protect. Because here's the thing. I mean, as a parent, whether you parent, it's who is you thinking about life insurance. You got to think about who is important to you. Who is it your kids? Is it if you're single? Is it your mom? Your dad? And whoever is important. The reason for getting life insurance is that whoever is dependent on you for so I think it's just a matter of that internal check that you take mentally and say, who is dependent on me? Because it's
Mm.
reckless, to go out there and just not wanting to think about anything to do with anything, and then decide that if you pass, they're gonna do a GoFundMe or put your family in a depressed situation to bury you.
Right.
Yeah, which is
Yeah,
something that everybody's doing nowadays. Anything happened, there's a GoFundMe that pops up.
Yeah.
yeah.
Yeah, so we have
Let's
Michael Foster.
Now
I see
we
you
answered
reading it. I see you
Michael
reading. I see
Foster.
you
Yeah.
reading it.
Yeah. Because sometimes it moves off the screen, so I was like, okay. So
Mm.
Michael, let me see what Michael says here. Can you switch from your term to whole life if you had it since you were in your 20s? Would it be more expensive? Yeah. Well, yes and no. It depends on which type you have. If you have the renewable and convertible term, you can switch. But I have a company which we don't talk about the names, especially in this platform. I still keep it
Mm.
because it's relatively inexpensive. It's a term, but it's not a renewable and convertible term. It's a 20-year term, but for what I'm paying, I'm keeping it. Okay, you understand? I mean, my daughter is 4. I always go to the last one. You want to get your kids at least up to age 20. And at that point, if you were to check out a year, then at least they could survive. But
Mm.
to answer Michael's question is it's if it's a term, it's always gonna go up. You
Yeah, you
understand?
mentioned that
Because
earlier. Yeah.
if it's a term, it's always gonna go up. Because you gotta remember, if you converted 5 years into the deal, you're gonna be what 5 years older. Every
Older.
time
Mm.
that you come to get insurance, they're gonna put your age in.
Mhm.
Only good thing about being a convertible one is at that point they're not going to check your health. So
Right.
that's the good thing that we teach folks to do. Get the one that's renewable and convertible. At least you're protecting your health. Because what happened typically, our income increases. I'm hoping everybody's furthering themselves and not just being laid back. Yearly, your income should be going up, or if not, you're doing something wrong. Or maybe you talk to me afterwards if that's not happening anyway.
I don't know, man. I mean, after a certain year, everybody's income got kind of up and down.
Yeah, well, the whole thing is you gotta, sometimes, and take this from me, sometimes you wanna give up. You gotta give up good for great.
Mhm.
But what I want you guys to understand, you don't want to be comfortable because there's no comfort in being broke.
Right.
That's fact.
You follow me? So you always stretch yourself. If you're not stretching yourself enough, and now this is Finance 101. If you're not stretching yourself enough, you want to get around individuals who would motivate you to grow.
Mhm.
Facts.
Okay.
Facts.
All right. And I see Veronica. Oh, what's up? What's up, family? I know who that is. All right. All right. Do we have a college fund? So our college fund, our program that funds college education, is actually one that the individual have to die for. So it's not like, and we could talk off the here about that one, because not about the college one for us. The one that we offer is really, you're gonna have to die, pretty much.
Mhm.
That will be available for your kids.
Okay.
Yeah, it's funded by term. It's not like it's put aside for because I know what she's talking, like when a child reaches a certain age, they there's programs
The
available
funds
in
are
Florida.
available.
Yeah, and we're in Florida.
Mhm.
There's programs available where you could get those set aside for your kids.
Yeah, and that'll determine by state too, right?
Yeah, that's going to be determined by state. Each
Mhm.
state has different programs that you could put towards. But to answer that, as you mentioned, college fund in insurance, there's actually, I'm also promoting other companies. I'm not one who just talk about me. There's different
Mhm.
types. We don't offer all insurance, just so you know. But there's programs that by the time the kid or the child is a certain age, if you get involved in certain programs, seek out knowledge, you could actually invest in some of those programs and be able to flip your money and be able to have passive income to take care of college education.
Yeah.
It's a good one.
Yeah.
Being as I know, it's tax season also. Someone had a big question on that to say, do they tax the policy if the policy pays out? Does the policy get taxed as well?
Great question. Absolutely not. So this is one of the things that we when and that's how um the 3%ers be dumping money in those index policies and so on. And then it's like the tax, they're not touched. You
Mm.
understand? So that amount that's paid out, or whether it be in those universal policies, okay, that there is out there. We don't offer it, but those policies that we're talking about, and death benefit is not taxed. So just so you know, but
Okay.
another aspect of it is that's how they be dumping money, compound in certain type of policies, and able to pull it out, reinvest it, and it's like the IRS touched them.
I was just about to ask if you were able to pull that money back out. Is there a time limit that you could pull that out?
Well, it's gonna be based on, in the index, what happened in that you want to compound it. If there's different types. There's one where if
Mhm.
you take the money out quick, it's like you're not getting as much return on it in terms of, you remember, you're gonna have to pay it back.
Mhm.
'Cause some give you a year to pay it back. If
Okay.
not, just understand the great thing about that is, if let's say you got 100,000, okay, and you borrow against it, what happened if you die? Let's say you borrow 10,000. if you die, they're gonna deduct the 10,000 from the policy.
Okay.
You understand? So, but now we don't advise people, and there's a lot of things that you got to know about that. It's not just any company and anybody saying that. You have to investigate that part real deep. Okay, so you hear a lot of commercials. You want to make sure you understand how it works, because agents gonna tell you a lot of things that fail. You understand? So yeah,
That's what I can respect about you. I respect
yeah,
that about you because
yeah,
when we were talking that time at the function,
yeah,
that's the one thing I said. I said I can respect that you're not coming from a salesperson
yeah,
angle where you just want to get the policy and then you don't care about the individual afterwards,
yeah,
So that
yeah.
I must say I can respect that.
Yeah, man. I mean,
I had one more question.
yeah. Go ahead.
No, all right, so I had a friend of mine ask, his parent, she's older with diabetes, so he was wondering, can someone in her condition, in her age, still be able to find somewhere that can find a policy for her, or is it because of the condition she will probably not be able to get a policy?
There's yes and no. Understand that when you have a health condition, there's just guidelines that they follow. Any insurance company, and guys, beware of those insurance companies who say no medical exam. Don't get caught up in those. Okay. You'll die. The thing is, you won't know. You'll die, and your beneficiary got to be finding attorneys to get your payout. Okay, so be careful of those companies saying no medical needed and all of those. You got to remember, insurance is a business, and so they have to take on a risk. They're not just taking on any risk. You understand?
Mm-hmm.
So, but diabetes is not a thing that's gonna deter you from getting life insurance. You'll probably just be rated based on if it's controlled or not.
Yeah, because it's a genetic situation, isn't it?
Yeah,
It's more
it's like
viewed.
yeah, it's like when you say diabetes, are they insulin dependent?
Mm-hmm.
And what happened is
Type 2 and all of that.
yeah, and it depends on their height, weight, and all of those things. So it's a combination of things that would let you know.
Mm-hmm.
Yeah.
That one. Veronica.
Now, Mr. Fabian, I do have a question.
Yes, go ahead.
What happens if the insurance company that we take the life insurance with goes bankrupt?
Great question. I wonder that too.
especially these days.
Yeah.
What happened? It's funny that you say that because I have insurance with my company. That's where I have most of my insurance. But I'll just tell you, speaking from a position of strength, Warren Buffett is one of the 6th largest shareholder in our company.
Okay.
So that's just in COVID we actually grew
Went up. Okay.
when other companies are going under. So there's not what you're gonna do about bankruptcy. If they bankrupt, it's now it's just a matter of think about it. Yeah,
Okay.
and I'm gonna say something else to that because it's funny that you say that because I'm a client too. Just know my company. I tell them call me and go over my policy because I'm a client. Okay, so it's the funny thing that you said that. I understand that. We drive cars. We have car insurance, right? Sometimes I have families paying upwards of $250 for their car insurance. And what families? This is something that we have to start thinking about. What families are doing? They're putting more insurance on their car than they put on their life.
Yeah, that's crazy.
Wow.
And that rocks my brain because here's why. Especially if you got kids, because when I'm talking, just understand when I'm talking to a client, I'm a parent.
Okay.
If your kids are important, then we protect you. Because I only sell life insurance to somebody who needs it. If you don't need it, bye bye.
Right.
You understand? I don't. I have families to protect who are depending on me to make sure they get protection. That if something happens, their family is not down in a distress. So the main thing is, and this is something that you all listening, you got to think about. you want to think about looking at your car insurance because, and nothing against people who sell car, but just understand as a individual, you want to look at how you get paid from a car insurance if you die in a car crash, right?
Yeah.
Right.
Yeah. But if you got a $250 policy on your car, but then you get a stroke, you die. How much is the car insurance gonna pay?
Nothing.
0.
Yeah.
Nothing.
But
I
people,
mean,
so
but
the
the thing
reason why
is though is
I'm gonna go to you. The reason why I said that is a lot of people complain about prices of insurance, but they don't think about the car because what happened, they pay the insurance and they're thinking, if I paid for a certain amount of time, because that's a question that a lot of people ask, how much am I getting back? Sometimes I ask how much you get back from your car insurance.
Mm-hmm.
You
You
can
know what I'm saying? So,
answer that question halfway when you
yeah.
say they
So
get from insurance.
yeah, it's just
trust
about
me.
what's important. Yeah, it's just about what's important to understand. You just gotta understand where you're at the value. It's what's hurting you as an individual. I know I saw a question earlier. John, you're gonna have to read them because I disappeared as I was talking.
Okay.
Yeah.
I do have one that myself. I'm asking this for myself.
Mhm.
So now, if you have insurance from your employer, is it recommended that I go out because that was optional for where I work? If I wanted to have an additional insurance outside of that, um, is it optional? Does it make sense? Does it make sense to just stay with the one that the employer? Because if it's a big place,
Oh,
normally
Yeah, I think
it's
you're
a cheaper
breaking up, John. Is
rate
it
for
just
you.
me? Are you guys hearing
Is
him?
it?
Yeah, he's breaking up.
Okay, okay. I want to make sure. All right.
I probably am. The Wi-Fi is not the greatest where I'm at right now.
Okay.
Let me repeat it then. Can you hear me better?
Yeah, yeah.
Yeah,
No.
we hear you.
All right. So what I was asking is, if you already have insurance through your employer,
Yeah.
does it make sense to get a secondary one outside, or just keep the one that you have from the employer, due to the fact that usually through the corporations they get a cheaper rate?
All right.
So
Okay. So job insurance. So 90% of the policies you're gonna come with is through your job. Now, job insurance, I always tell my clients maximize as much as you could get. That's the cheapest insurance you're ever gonna get. Get the biggest plan when you're at work, but understand something. That's a group term.
yeah.
It's not a member owned. It's only happen in open enrollment, correct? So what
right.
happens? The employer controls anywhere from 60 to 70% of that. The employer makes the decision. So when you're thinking about it, you cannot have an employer making a decision on your life insurance. And some of those
Okay.
insurance only cover you if you die while working.
Mm,
You
okay.
understand?
That's a tough one there. Yeah.
Yeah, yeah. And think about it. And let me add to this because this is something that I get this question every day.
That's why
You're
he
with
said always get
you're
the
with a
second.
job, right? So understand this. A lot of people sometimes, because they tell us go to school, get a good job, right? Just over broke, right? Job, right? Um,
Mm-hmm.
they say get a good job. So we at our job and we staying there 5 years. So understand what's going on right now. You at a job and years are passing. You're there 5 years, 10 years. What happened to you? You're 10 years what? Older. But do we all agree that you could get fired?
Oh yeah.
Yes, yes or yes.
Facts.
Immediately.
Okay.
Yeah.
So picture this.
Without a 2 week notice too. Keep that in mind.
Exactly. So
Yeah.
the answer to that is you always want to get a member owned, where a
Mm.
member owned means it comes from your bank account. You control it and you could take it with you wherever you go. Whether that's a term or a whole life, that's fine. It just gotta be member owned because the employer is gonna do what's best for them. They could move whichever company they choose at any given notice.
Right.
Okay.
You understand? Yeah.
Okay.
Now, if I can double back with car insurance, we were talking about it earlier. I know some of them offer life insurance. Is that something that you would consider, or
Yeah,
absolutely not?
they're like Walmart. You know, they dabble into everything.
Oh man. Oh man.
If you wanna, let me tell you, and this is something that you gotta know. Like if you guys going out to eat,
Hmm.
um, that you wanna, if you haven't done it, there's a rating on the restaurant. You always want to check the rating of the company that you're with.
Okay.
Mhm.
You're going to eat, just don't go there to eat because your friends are going there. There's a rating because they have to put it on the wall
Mhm.
as
Okay.
what they're rated overall. Our company have what's called A plus superior financial strength rating, and I'm super
Hmm.
proud to say that.
Mhm.
You know,
All right.
and to serve unions, so you got to understand how that is. So that speaks volume. Anything with an A where I'm from is a good thing, and they put a plus with it. So you know,
All right. Well, congrats and thanks,
Okay.
man. And
yeah. So
No,
that's
but that's what I say. It's kind of like when you have like low income homes associations and stuff like that. You got to be on the tee with everything because the government's checking every
correct.
little thing you do. You know what I mean? So can't be like a private company that just jumps in and jumps out.
Yeah. So
Now,
yeah,
but with
definitely. I
Now I
mean, you
do.
want to.
Go ahead.
no, go ahead, Jonathan.
No, no. I was gonna throw a loop de loop. This came from Crystal. So this one here
Uh,
is called what we're calling a loop de loop. So she's asking a question now. Now it's a little off center, but we have seen it many times in the news where your spouse is trying to knock you off for the money, right? So now,
we all seen that for a long time.
so
Ain't just in the news.
so what the question is now, let's say for instance now, if your spouse did knock you off, would the kids still be able to get the funding from the policy, or is it just over with because you know the spouse got caught, she's locked up, and now the insurance company's like, hey, well,
Okay. Great question. So understand that you got to remember there's the person that the lump sum amount is paid out to is called the beneficiary.
right,
Okay. So you got to remember it's whomever you choose to put on your policy as the beneficiary. Meaning,
okay,
sometimes people take policy out, and the significant is not the beneficiary.
okay,
You understand? So once somebody dies, they're gonna look at who is the beneficiary, and that's who they're gonna pay the money to. Okay, understand if you put your kids as beneficiary, and they're on the 18, the
Mhm.
money is gonna stay there until they're 18. Okay,
okay,
so that's something that you got a primary beneficiary, and you got contingents, backup to the backup. And what you want to understand is most times you always want to have a backup because most times people put the person that they're closest to as the primary, and what happened most times they die in an accident together.
okay.
You
Oh, that's
understand? So
tough.
you want to
So
always.
Sometimes
basically,
you won't get it. Yeah,
so
you won't get
basically,
it.
any one of your kids or the spouse, if they looking at you funny every time they walk by, you ask them for something to drink or something, you gotta change it. Kids, it's
Yeah,
like,
yeah, yeah,
I don't
yeah,
like how
yeah,
that kid been looking at me.
yeah, yeah,
Change it.
yeah. You could change your beneficiary. The owner of the policy can change the beneficiary at any given time. The
Okay.
owner can do that.
So
Sandra,
what if your spouse is the one that took out the policy?
It doesn't matter who takes it out. It just matter who the owner is. The only person who could make the beneficiary change is the owner. Because
No,
you got
I'm just
policies
going
here.
off of what John
yeah,
said earlier about the spouse trying to knock you off and they
Well,
they
let me answer that. But you gotta
another
remember,
question from John John. Nobody else.
you gotta,
No, no, it came from Crystal.
yeah, yeah. And listen,
Yo,
you gotta remember, you know, they're gonna look. It's what's on the death certificate. If it's
Mhm.
if
Okay.
it's if it's there's things that can be investigated, and and so on. So there's such thing called insurable interest that it exists between significant. It doesn't have to be spouse. It's insurable interest. That if you guys are together, you share kids, you share bills, then that's insurable interest. So just to answer and add something to that, if you got your significant, that's insurable interest, you could take out insurance on your significant. Of course, with their knowledge. Okay, don't be trying to go behind them because
Fellas, be careful because remember, women watch nothing but murder films, dramas. they-
Snap.
Lifetime.
be careful,
Snap.
fellas.
Snap.
Hey,
yo, it's funny
COVID came around and How to Get Away with Murder went up in
Hey.
ratings.
Hey, Blacks, let me tell you something. I'm not even kidding you. That was one of the questions right there on it too. That they said. That was one of them that she asked me to ask also to say, okay, if it's what would be the answer? He just answered it. So that's what I'm trying to tell you. Females think different.
it's both ways, though. It's both ways. It's both
Yeah,
ways.
it does.
Yeah.
Men always get caught though.
You know why we don't know how to bring the tears on that fast. But it said, "Oh my God, she died. It happened." And they were like, "Oh yeah." And then they
Hey, let our car get scratched or the toolbox fall over. Yo, what the?
But it happens. Go ahead. Put that in.
No, trust me.
Can we list a trust as a
I didn't hear it. I didn't hear the question. See, just turn up your volume just a little bit, please.
Can we name a trust as a beneficiary?
Absolutely. A lot of people do that. That's individuals who probably don't have kids and so on. They'll put it to a trust, and yeah, you could do that. You could do that.
Wouldn't it be beneficial to have it in a trust for the kids? No?
What is the who?
Yeah, wouldn't it be beneficial to put the money into a trust? Or
No, what happened? So understand. If there's a if you got a child who is under 18, you could put the money in a trust to make sure that once that, and that's going to take me to another thing too about will, because Florida is a probate state, just so you guys know that. All right. So what it is, you put it in a trust, and then it's accessible
Yes.
when the kids are a certain age. You understand? So that's how that works. But just another note to that, Florida, if you haven't made a will, if you're listening to the sound of my voice and you haven't made a will, just understand that Florida is probate state, meaning if you haven't made a will and you pass, then yes, your family could get what you have, but they're gonna have to pay expensive attorney fees. Okay, because it go to the government, your estate. You understand? So understand that. So we help with that too. Just understand if you're going through divorce and you got a lot of assets, we're not gonna be able to do that. We say get an attorney, but if it's just a simple living will, that's something that we help you guys take care of too.
tell us the name of
Okay. I actually have two questions for you. I don't know if y'all can hear me.
Yeah.
Yeah,
Weird.
Okay, because they was complaining in the messages about my microphone.
we hear you, Barry White. We hear you.
Okay. The first question is, if your health changes, like you have a good bill of health currently, but something happens 3 years in, how does that affect the policy?
Okay, so that if you got, and I want to make sure I get it right. So if you already have a policy, right?
Yeah.
Yeah, if you already have a policy.
Okay, yeah, you have a policy.
Yeah, if you already have a policy, it's unaffected.
Okay.
The only time that your health is considered is when you're trying to get more life insurance.
Okay.
Yeah, that's the only time. And if there's nothing, you got the policy already because you already qualified for that program. Already.
So it wouldn't matter if your health was to diminish overnight or decline in a week. Okay.
Understand this, and this is I want you guys to understand. So let's say you sit with an agent today, you take out a policy
Mm-hmm.
today, but when you took out the policy, you didn't have a stroke.
Mm.
If tomorrow you got a stroke, you are signed up, enrolled program today, which is Friday the 24th. Tomorrow you get a stroke. They cannot use the stroke against you
Okay.
because when you took the policy out, your bill of
You were
health was
healthy, yeah.
healthy. So
Okay.
Yeah,
that's
so
the key to take out policies when you're healthiest and youngest.
So it
yeah,
doesn't have
so
an
yeah,
effective
so
date.
it's set based on the state of the written of the or the creation of the policy.
Yeah.
So if you go to if you add more to it, they're gonna update the state of your
Yeah.
policy and your condition and stuff like that. Okay,
Yeah.
I see what you mean.
That's
So
it.
you want to build on it when you're in a healthy state.
Yeah.
So that way later on when you are getting old and retiring and stuff, it'll be pretty much fine.
Mm.
And to
Okay.
add
Gotcha.
to that, let me just add something to that. And that is why we teach clients as you get in life insurance, whole life is more expensive. So what you want to do, get a whole lot of term, renewable and convertible term, and then you gradually you convert it. Because what you want is the cash value building policy. But what you do, you get the whole lot of renewable and convertible term. And what happened over time, you convert because what happened, you that's gonna help to protect your health.
Okay.
You guys get that? So that's
Yeah.
why that's how I teach clients because they a lot of people hear the people talking and they hear and listen, agents will tell you because here's the thing: whole life is more expensive. You gotta understand that's how they feed their family. So the
Mm-hmm.
thing is, client is not what is what's best for the client. If I see the client has 2 kids, 1 child, I'm trying to get them covered as much as I can with renewable income protection, renewable and convertible term, because I'm about their kids. You understand? So you want to understand whole life is going to take a whole lot more. You probably could gradually change that into the term protect your health. Okay.
Okay.
Okay. My second question was, how can our viewers find you?
You spoke. Oh, go ahead.
Music.
Oh, how can the viewers find me? They watch TV. I'm just kidding.
Celebrity status, y'all.
This is commercial moment, right?
He's been verified.
But yeah, I'm still learning the old IG. I'm not on all the platforms. I'm on Facebook. I'm on IG. Tell you what IG is real quick. I gotta look for it. You see that, right? So I'm not that versed at it yet, but
Oh man.
I'm learning.
Join
That's
the
the good
team.
thing. So if it's on Instagram, yeah. Listen, it's always good to learn something new, right?
That's
On
what we're doing
Instagram,
tonight, man.
absolutely. On Instagram, I have one. It's called Laser Links 2015. So it's L Lima Alpha Sam Echo Romeo Lima India November X-ray 2015. Laser Links 2015. That's me. Okay. And on Instagram again, I got one. It's called Fabian Planner Ed Kits. So it's Fabian Fabian. Planner Ed, PLAN, Ed, AHEAD, and then Kits.
Okay.
So I'm on Facebook, it's my name, Fabian Wilson. As also, I have one, it's Planner Head Kits for you on Facebook.
Okay.
All right.
All right.
Kids as in children or kits as in like creation.
Kits and
Yeah.
Kits
KIT.
and KITS. And then the
Okay.
easiest way, guys, it's my phone number. I give my phone number to every and anybody. 954 461 6462. If you call me, you don't get me, always send text because I use the phone to work. So I'm always talking to client. I'll promise I'll get back to you.
Okay.
Yeah, and he also, yeah.
You were speaking prior about building the wealth factor from this. That's what I'm like the most sitting here. That's what I want
Yeah.
now. That's what I want.
All right. So I'm gonna speak of it, but we don't offer it. Okay.
Right.
So yeah. So you wanna it's an index policy. It's a farmer permanent policy. Those build cash values rapidly. IUL. You wanna index universal life. You guys wanna find companies who talk about that, because what happened, those policies build cash value real fast. I understand it's not a debt insurance. I'll tell you why. Because if the market crashes, some of those policies will crash.
Mm.
So you guys got to really dig deep and make sure you understand where you're going with that. Those policies, it goes by the market. If like a recession hit in 2008, those policies will crash because it has the stock component in it.
Oh,
You understand? So it's like an investment policy. So there is those type of policies out there. You guys just gotta investigate which one works. Have the agent break it down to you, and whenever they're talking to you guys, write it down, and make sure you look and make sure you understand every piece of information they're giving you, because that's the only way.
Okay.
Some people say that we can roll over a 401k into an IUL. Is that wise?
Always, because 401k, you gotta understand your money is in prison.
Tell us more about that.
In prison.
I
yeah,
mean,
yeah. I don't believe it.
yeah, it's just like a W-2 1099.
Mm.
Your money is in prison, and if you try to take it out, they charge you
Penalty.
interest. Penalty. Yeah, so most
10%.
people, and you can't get it to a certain age. I think it's 59, right? 59 or something like that.
And a
Don't
half.
don't quote me on that. 59 and a half. Thank you.
You can borrow from it, but not.
You got paid back.
Yeah.
And you got to remember, there's stipulation on 401k too, where they'll tell you that you got to take some out, and if you don't, there's a penalty.
Yeah.
So
You see how they trap you nowadays? What I'm telling you, man.
Yeah.
It's better off to just make your money and build it up yourself.
well, and take risk. I'll put that part on it. You got to take risk, and risk is in entrepreneurship. So everything that we're teaching you is, yes, you want the debt component, but they do have the portfolio where you could use your insurance as a bank. You pretty much be your own bank. And those are what those policies are for. I don't speak much of it because that's not my area. Obviously I have some knowledge, but then I'm gonna have to go tell you which company and so on. So, but that's not my expertise there. But that's out there. If you're looking to create passive income.
Yeah.
Because insurance is for passive, and it's a life insurance, so you want to enjoy it while you're living.
Alive. Yeah.
Yeah. And also there's one where it's generational, where you want to go 3 generational deep, because that's the only way. Because and then that's when we're gonna move the trajectory from now. Not the 27% uninsured that don't qualify. We want to make sure that we doing that, so we set the tonality for our kids. I understand they didn't ask to be here, guys. We
True.
we go out there and make they be here. So the whole thing is, there's those policies out there, and those policies are good. Don't mix the two though. If you got your final expense program, you don't want to gamble in that, because you got to understand the market crash, and because who knows when the market is going to crash, right? War going on and everything. Who knows?
Yeah.
You want to have your real life insurance that's going to protect you, because you're not only doing it that way, you're protecting your health. Because if you ain't got no insurance and your health change, then it's a done deal.
True.
You're gonna have to have that money saved up.
Okay.
Yeah.
All right.
Sassy, go ahead.
We're gonna have to run the final thoughts on it. So
Yeah.
Well, I do have one last thing, because this has been something that's been in the news before, about like these rappers that's been passing away, and these insurance, the record labels having insurance on the rappers. Is it the same thing? Can your employer put an insurance policy on you without your consent or your knowledge.
Yeah.
Well, it's not a consent or knowledge. It's called a key employee. Yes.
Mm.
It's called a key employee. That's what they call it. It's like so the answer is yes. It's not they're gonna do it without you know. You gotta remember everything is run out of business for profit.
That's what I
So
was saying.
employee is like you gotta
Yeah,
remember.
because the artists are a product in the end of the day.
Yeah. It's like if you're an athlete, you run, you could insure your legs.
Okay.
Yeah.
So that's just how it is. You gotta just so the employer is looking at it of a standpoint like this is my key employee. They call it a key employee. So if you're the key employee, they're gonna and that's a wise decision because you gotta remember if you're such a key company, that means you're marketable. They want to keep.
Right.
That's what I'm saying. So yes, to answer the question, yes, you can insure your employee.
Okay.
That key employee, yes.
All right.
So in closing now, John.
Yeah. In closing now, I want to know who Stacy is because she's very educated on
Yeah,
subject matter.
she been hitting us like,
Yeah, Stacy is one of my cool persons. She's here with me, so she knows what's up.
She's fabulous.
Yeah, she knows what up. She represent the same company I represent. We serve a lot of members in the association. So yeah.
It's a good
He's
team,
just, he's just dropping notes in there so y'all could get.
We thank her for that, for informing us more and giving you the question so you can answer it.
Yeah.
For us, because this is a learning point for all of us right now.
Yeah,
it's a learning point for all of us.
But just to, I'm not sure if we were saying put a close on it, right?
Yeah.
Yeah.
Just to understand, once you understand this concept, guys, life insurance is we just got to think. The first thing, anyone who has life insurance is somebody who loves. You got to first have love inside. If you ain't got no love, you're not gonna have life insurance.
Wow, you break down that so smooth, man.
It's love. It's like you really got to care about your surviving individual. That's the way it starts. Who is important to you? Am I going to be trying to leave them something if I pass? You understand? And that's just it. And then at that point, we figure out where you're at in life as it relates to what your health is, what your budget is, because this is life insurance, not 4 months insurance. So we're not going to give you a policy that you can't afford. We're going to see where you're at. We're going to tell you what's recommended, but at the same time, we're going to meet you where you are as it relates to budget, because it's not a one-size-fits-all. So the key is just first, what our company does real quick, we protect families first for just 1 hour of their paycheck every week. So the first hour of your paycheck is what we use. So if you work $20 an hour, we're going to give you an $80 policy. Okay. If you need more, and that's just it. If you need more, then we're going to adjust it a little bit. We're not going to stretch you over where, you're going to keep it for two. Because here's the thing. I'm not going to be paying your family if you die. So we want to make sure you have something. Because that's just the bottom line. And if you got kids, if you're hearing my voice and you got kids and you have no life insurance, you're doing your kids a disservice.
Wow. Okay.
That's true.
Because, especially kids 0 to age 17. You have to, let's do away with that generational thought of let the dead bury the dead. No. Dying is the easy part.
Right.
The stress is going to be on your surviving spouse or children to maintain life. Yeah, absolutely. Sit down with somebody, because life insurance is really less than you think. And I always joke when I talk to my clients. I say reduce the trips at, nothing against my favorite food place. Occasionally. Chick-fil-A, I'll just say reduce the Chick-fil-A visit. Because when you go to Chick-fil-A, if you go to Chick-fil-A, you can't afford life insurance. I'll tell you that right now.
I agree.
If you go to Chile, you can't afford life insurance. So
Yeah.
don't make your minimum be your maximum. You want to make sure you protect your family and leave something, protect you because you gotta understand there's benefits as it relates to we have different policies to just say cancer, supplemental stuff,
Yeah.
critical illness, and you just gotta understand how those work. It's not about throwing out products at you, but there's different products to cover certain things. So when you sit with an agent, you want to find out what they are, how they work, and you'll get the education. That's what we do is education. What's right for you is what we're going to give you at the time.
Yeah.
Okay.
Right? Yeah.
All right. Well, Mr. Fabian, we appreciate that, man.
Yeah, we
Yeah, I mean,
appreciate it.
definitely learned a lot of stuff today. You know what I'm saying? Just make sure healthy people on this panel get your stuff sorted out. All right. So that
Yeah.
way, they can stamp your position in life.
Oh,
Yeah.
You don't want to wait till your toes start falling off. And then
Yeah, listen, it ain't no joke because listen, I say it sincerely. I speak to clients even when COVID initially started, and I have clients when I go back to them, their health changed. And that's
Yeah.
a bad situation, and I'm like, what are you gonna? I really ask the question, what are you gonna do now?
Yeah.
So you just gotta be wise. Think about your kids or your loved ones, and just go for it and get something started is what the base of this call is. If you have none, sit with someone, preferably of course yours truly, but sit with someone and get the education of where you are, how much life insurance you're gonna get, and start there. The key is to start and pick it up as you go.
Okay.
That's how it is.
Thank you very much.
Well, I can tell you right now, I'm gonna set my appointment when I get up with you. So that's right.
Absolutely. Let's tell you what my number is again. 954-461-6462. Yeah, I think that's what it is. Absolutely. Yeah,
See that?
that's the IG, right? And that's the Facebook too. So just text me guys and I'll tell you, I promise you, if I can't help you, I'm not gonna hurt you. I build relationships.
Okay.
Right. I can respect that.
Yeah, we build relationships. Okay. So that's
Appreciate it, and I realize how you mentioned so much about family and the kids and the family. Real family man.
Listen,
From
you got
day
it.
one. From day one.
Kids are beauty,
Yeah.
man.
Yeah.
Kids are beauty. If you have no kids, go buy some. Just kidding.
they be like Hollywood up in here.
Yeah.
Yeah, man. So easy.
all right.
Appreciate
So
you
So we
guys for
definitely
the
want to
come
thank
on the
you
on.
closing.
for joining us tonight.
Okay.
For the rest of the I don't like using the fan thing. For the rest of the family out there that normally listen to us every Friday, we want to tell you there's so many different educational things that we've been putting on this platform. We just ask that you support the situation, subscribe, ring the notification bell, keep reposting things like this. Because for me, the day one when I met Fabian Wilson, I knew that I had to have him on the show to just educate, and not only everyone, but mainly our community, the Caribbean community as well, because we are lacking and we're so far behind. So to have the information like this, it's a blessing right now. So I want to thank you, Fabian, and everyone else that's on the panel for joining us tonight, making this another phenomenal show. And don't just
Stacy.
sit here and just listen and put your little questions in and don't put this to pen and paper and make this thing happen. You have the phone number, you have the links, call them and make sure you mention that you heard it live at the barbershop so that Fabian can give you the discount.
And let me ask you, do you guys have the recording of this?
Yes.
They could, yeah. Okay, yeah, definitely, because we like to educate. But one thing we do, we like to educate. Once you get the education, any decision is a decision. If you move forward in getting it, that's a decision. If you don't move forward, that's also a decision.
Facts.
You know what I'm saying? So one, they take massive action to protecting yourself and family. That's the main thing, and your health. and that's what I'll leave you with this. Till I meet you, and I'll say, walk with the king, be a blessing. I see you at the beach or at the bank. All right.
So Blacks is not far. You hear what he said, Blacks? He's not far, so you gotta go put in that, Blacks.
Oh,
Yeah,
and
man,
listen, before you go, I'll just do this too, because sometimes, as I said initially, you got to be able to give up good for great. If there's anybody out there that's looking, man, to change their circle, and as it relates to stretching themselves, we also have opportunity available too. Because we a lot of people, a lot of families to protect.
Right.
The company has been a blessing. I think that's my little logo, blessed beyond belief. I'll tell you. This year, last year I was blessed. They took us, me and the wife, to Vegas.
Nice.
I've been to Vegas a few times, man, but it's on my dime. But last year it was company's dime, so it feels a little bit better.
Okay.
And yeah, I'm just keeping it real. And this year we're going to Cancun. Unfortunately, she's not going to be able to make it because she's in school. But you take whoever you want, so that's just what it is. So next year, for those of you watching who probably thinking that you want to do something different, we're going to Hawaii. So you
All
could either
right.
So we need to check that out, definitely.
yeah, you could either meet us there or beat us there, whichever one is fine with you. Guys, be blessed. I love you guys, and ain't nothing you can do about it other than love me back. All right.
All right,
All
man.
right.
Awesome,
Thank you
awesome.
very much. Thank you very much for joining us.
Blessing, man. Thank you, man.
All right.
And we
Cool.
tell everyone, go out in the world and be somebody. Okay.
Be a blessing, man. A blessing is a blessing until you could give it away. Be a blessing to somebody. Tell somebody you love them.
Yeah.
Smile.
That's a fact. That's a fact. That's one of the
Thank
things we're not
you.
really doing too much.
Thank you again. Once again, the guest for tonight, the famous Fabian Wilson. Okay, so please do check him out on all the platforms that it was mentioned. The phone number is there, the information is there, and anyone that didn't get any of this for some reason, I don't know why you wouldn't. You can always just email us or get in contact with us as always. All right.
All
Thank
right.
you very much. And to all out there, God bless. Get home safe. And everyone, thank you again. Until next Friday, 9 p.m. sharp, live at the Barbershop. Thank you very much.
Love you, John.
Yes, man.
I love.
Later, yo.
Go out in the world and be somebody.